Hi everyone, in this video I'm going to do a brief earnings review of Intel's fiscal 2022 third quarter results, so let's get right into it. Intel in this quarter emphasized focusing on expense decreases as customer demand slows. Overall revenue decreased by 20% in the third quarter to 15.3 billion. Remember, Intel benefited from the boom in people spending on computer electronics and things of that nature for in-home offices, and as consumers had more stimulus checks to fund those kinds of purchases, Intel was one of the prime beneficiaries, and it's now reeling from the effects of consumers' habits changing from spending on electronics and computers and things like that to spending on things like restaurants and theme parks and concerts and away from home experiences. So earnings per share of 25 cents was down 85% from $1.67 last year. The massive slowdown was including a $664 million charge from a cost cutting plan. Intel is focused on driving $3 billion of annual savings in 2023, and that's going to grow to $8 to $10 billion in savings by 2025. So, massive focus on reducing expenses for Intel right now. Furthermore, they are easing their supply chain risk by investing in two advanced chip making facilities in Ohio. This domestication of supply chains is becoming more widespread, especially as the US government passed a fiscal bill helping semiconductor production companies to build more facilities here in the US to decrease the supply chain risk of having their facilities in potentially hostile countries. Finally, cash flow from operations fell to 7.7 billion in the 9 months ended October 1. That was down from 24 billion in the same time last year, most significantly because of the decrease in net income that decreased cash flow from operations, but also inventory. I've been checking with every company that I follow now. Inventory is a primary focus of mine because I've been seeing rising inventories in all kinds of companies, but especially in some semiconductor companies. I know nvida's inventories are way more elevated than they need to be, and then also with brick and mortar retail companies like Target, Walmart, Amazon, their inventories are also much higher than they need to be. And so I've been focusing on inventory levels as businesses kind of overreacted to supply chain shortages during the early parts of the pandemic. So thankfully, I checked on Intel's inventory and it was just about 20% higher than it is in the same time last year. Not as much of a boost compared to other companies in the industry or even other retail companies. And so their inventory troubles are not that significant compared relatively speaking. So that's good news for investors. Overall, investors were pleased with Intel's earnings report, most significantly due to this focus on cost savings. Investors, market followers have long, known that consumer behavior is shifting and businesses like Intel need to focus on some cost savings as demand is going to slow down as consumer spending shifts to make up for some pent up demand in other areas that they were not spending on when they were cooped up at home. So Intel stock jumped following this earnings release. And we will see the stock is relatively inexpensive. And let's see over the next few quarters Intel's progress on these cost saving initiatives. So this is something I'm going to be following with each quarterly report, is looking at management's commentary and its progress in this cost savings plan. Do they update investors and say, oh, you know what, that was more than we could actually achieve these figures, and so we're going to have to bring down our goals of how much we can actually save in cost reductions? Or are they going to update investors and say, you know what, we've made more progress than we thought, and we think we can actually achieve more cost savings than we initially thought? So that's going to be an area of focus of mine. So make sure to subscribe to my channel. I will be providing updates as over the next few quarters as Intel progresses on this massive plan to save nearly $10 billion in expenses by 2025. All right, that's all I've got for this Intel review. If you think I've added any value to you, please hit the subscribe button. It'll help me make more videos like this. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.